My name is Beth Carter. It's great to see everyone tonight. I am the executive director of the Rhode Island Business Competition. And it was funny, I was thinking about it today. I've been in this role now 18 months. When I had only been in the role 6 months, of course, everything went crazy. But we've gotten a lot accomplished in this short period of time. We have completely revamped our website to make it much more user-friendly. We really encourage you to go on that. There's a lot of resources available for entrepreneurs, but we'd love to hear your feedback as well. So any thoughts you have on that would be terrific. The other thing I want to mention is, of course, that our competition is coming up. The application deadline is March 29th at 5 o'clock. The portal actually shuts down at that time. So we hope that you will, if you are interested, that you get your application in on time. The other thing is that we send out email blasts periodically. It's to alert you about our events, as well as some of the events of our sponsors and our growth partners. But we also put in some of the news and events. We also talk about our success stories of past winners and finalists. So if you'd like to sign up for that, please visit our website at ri-business.com. So we're going to get started with tonight's event. Our moderator is Anthony Mangiarelli. He is one of our co-chairs. He's a partner and he's the director of the Enterprise Services Group for KLR, which is a public accounting firm. So I hand it off to you, Anthony.
Thank you, Beth. Tonight is the Rhode Island Business Competition bringing back one of its most popular workshops entitled Find Those Funds. We're excited to have such a distinguished panel of experts to provide information on the resources that are available to entrepreneurs. They'll each tell you a little bit about themselves, but I want to thank in advance our panel. We have joining the panel this evening, Ed Bard, who is the co-founder of Response Technologies, who was a former winner of the Rhode Island Business Competition, and most recently was exited his company, has a successful exit equity event. And I think it'd be great to have Ed speak about his travels along the way and how he got from point A to point B. Joining him tonight is Ella Hood, who is the new executive director of Cherrystone Angel Group. And if you're not familiar with Cherrystone Angel Group, they are the premier Rhode Island-based angel group located in Rhode Island, but they do deals, I'm assuming, all over the country as well as all throughout New England. And finally joining them is Angela Laperriere, who is a AVP and a business assistance manager and lending officer at C Corp, which is an alternative funding group. That'd be great to hear from Angela as to what they're seeing, especially in the middle of a pandemic. And as some of you may have heard, if you joined the call a little bit earlier, she was on the panel last year. So we're thrilled to see that she's agreed to come back. So that means she must have had a good time last year. So thank you, Angela, for coming back. Before we begin, though, I do want to mention that our sponsors are really what makes the competition possible. And our sponsors include private companies, service organizations, public agencies, colleges and universities, banks, investors, and most importantly, former competitors. These organizations provide ongoing support, which enables the competition to function year to year, which allows entrepreneurs to build a business and framework to transform their idea into reality. And I know I've seen a few of our sponsors on the call tonight, so I want to thank, I know I saw John Sylvia from Bristol County Bank on the call this evening. So that's great to see some sponsors joining in. So thank you for continuing to sponsor entrepreneurs and help them grow here in Rhode Island. And, I think it's important to note that since we were formed in 2000, we have over 50 previous competitors that are making a huge impact on economic development here in Rhode Island by growing and expanding their businesses, hiring employees, and buying from suppliers and service providers. In addition, tonight I'd like to acknowledge our partner Venture Cafe, who's producing tonight's event. And, as you heard earlier, although we'd prefer to all be together in their amazing space, we hope you recognize the hard work they have done to make tonight's event as spectacular as possible. I'd also be remiss if I didn't mention Bryant University's social media team, who will be spreading the word about the competition through all our social media platforms, including Instagram, Facebook, Twitter, and LinkedIn. And then lastly, I would just like to thank everybody in advance for their time and attention. So, I'll give you some guidance on how the panel is going to work this evening. To start, we're going to have each panelist introduce themselves and give a 30-second blurb about what their roles are in their respective companies, and just some thoughts on entrepreneurship in the middle of a pandemic. And then we'll jump into a few questions that I have for the panelists, and I'll throw them out there, and we'll have each panelist kind of weigh in on each question. I would encourage the audience, if you have questions, to put them in the chat, and we will get to those questions at later in the hour. So if there's, no questions, I think without further interruption, let's jump in. I know I saw all three of our amazing panelists are ready to go. So I guess I'd like to kick it off to Ed Bard, who's the co-founder of Response Technologies. Ed, take a 30 seconds to introduce yourself and tell us a little bit about Response Technologies and yourself.
Good evening, all. Ed Bard here in a lovely high-end Holiday Inn hotel room in Virginia, doing business. My co-founder, David Petty, and I started Response Technologies in 2015. We started on paper December 2014 in a Chili's on the back of a napkin. So we were those folks working out of our garage, doing chemistry and all that good stuff in our garages. In 2000, we started the company with the vision of really disrupting the three-dimensional textile reinforced composite market, which was multi-billion-dollar things. We thought this was going to be easy, no big deal. We quickly learned that it's all about the market. It's all about traction. And we were fortunate to get into Mass Challenge as finalists in 2015. We won, as Anthony mentioned, the Rhode Island Business Plan competition in 2016, got our first SBIR at the end of 2015, got our phase 2 in 2016, which I'm sure we'll get into more details later. But that really funded us, and we grinded for several years, grew to about 30 folks. And then in December 2020, were acquired by Bell Textron, and all good. Now we're both employees of Bell while still running Response Technologies.
Great. So I think it's exciting to have Ed on the panel tonight because he's I don't want to say completed his journey, but he's completed a journey. So thanks, Ed, for joining this evening. And let's next move on to Ella Hood, who's the new executive director of Cherrystone Angel Group. Cherrystone is also a sponsor of the competition, so we appreciate that and look forward to hearing your thoughts on entrepreneurship locally in the state. Ella?
Hi, everyone. It's great to be here. I have a deep background in entrepreneurship. Originally, I'm an M&A attorney, and I've done practice in Israel, done benchmark venture capital investments in Israel and a lot of Israeli high tech, also Cisco Systems, Merrill Lynch. Later on, I went to study an MBA at Kellogg at Northwestern University and kind of stayed here. I met my husband at school, and he kind of followed me to Israel and brought me back to the US. And since then, I've worked in several different positions. I worked at Merrill Lynch on the trading side. I worked at several other companies that in an innovation department. And when we recently, it's not that recent actually, about 8 years ago, we moved to this area, to Providence area. My husband took a job with Citizens, and I got involved in what I love to do, and volunteered to help the Brown Entrepreneurship Program in anything they need. I've judged competitions. I've done office hours, mentorship, visiting, lecture, anything they needed. Just love to be involved with the local entrepreneurial spirit. Through that, I got involved with Mass Challenge and was asked to be on their board, judged competition. I still judge their competitions, and helped kind of like establish the program in Rhode Island that is doing great. Just love seeing the growth. I was also involved with, co-founding another nonprofit that connects between businesses in Israel and Rhode Island called Rhode Island Israel Collaborative. And now my recent, I hope, help to the entrepreneurial ecosystem is with my new position as the executive director of Cherrystone. Cherrystone is the oldest and the only really organized investment group in Rhode Island. They have over 60 investors, sophisticated investors, and we supported throughout almost 20 years that Cherrystone is operating quite a lot of businesses in the area, including Narragansett beer, for example. We have a lot of other companies that I think you'll know, and I'd love to know that we're supporting. We focus mainly on companies in New England area, so we'll have a lot of med tech consequently, but we're open to any kind of ventures. And I'm glad to be here.
Thank you. Thank you for joining us this evening. And lastly, we have Angela Laperriere, who you may have heard if you were on the call earlier, is coming back for another round, another year. And we were talking earlier about this being the anniversary of COVID, but let's call it the birthday of COVID. It's the 1-year birthday because we know things have changed a little for you since last year. So please introduce yourself. Let us know what's going on with Seed Corporation.
Great, thank you so much for having me. So Seed Corporation has been around since 1982. We're a small business lender providing loans to both startup and existing businesses throughout Massachusetts and Rhode Island. So we're really here to help if you can't get traditional financing from a bank. So we work with lots of different banking and credit unions throughout the region in both states. And we're really here to work as a partner for them and to fill that gap when either bank financing can't be obtained or if the bank needs a partner on a loan. So I've been with Seed for 10 years now, and I work with both small loan clients looking for a microloan anywhere from $1,000 to $50,000. And then our small loan program can go up to $250,000 to be able to partner with a bank and provide that financing. We also have real estate lending under our small loan program if you're looking to buy real estate for your business that has to be owner occupied. And we have the SBA 504 program as well that allows us to partner with a bank for that program, allowing RPs to go up to $5 million for for-profit businesses and up to $5.5 million for manufacturing. So it's a really great program. For any of you who are located in Massachusetts, we have funding available through an organization called EDA, which is actually, although we're not lending, I know we're going to talk a little bit tonight about different programs for COVID relief through PPP and EIDL. But for those businesses who are in Massachusetts, we have funding available specifically for those businesses who were negatively affected by COVID that's outside of the PPP program and EIDL. So those loans can go up to $350,000. So the small loan program is really great for startup businesses and an existing business if you're looking to grow or you need equipment. The use of funds can be really flexible for working capital, furniture, fixtures, equipment, refinancing credit card debt, or real estate as well. So we do have the ability to get a guarantee from SBA if we need to. And I know we'll go into a little bit more detail, but Seed's been around for a long time. And Sue's on tonight. She's our executive director, and she came on board almost 2 years ago now. So it's been a great transition, and we've seen a lot of lending activity given the past year has been really tough for everybody. So lending guidelines have changed a little bit, but we've really seen a lot of activity. There's still a lot of good coming out of this year. So I'm happy to share some stories and examples and to try to point you in the right direction to know really who to reach out to for financing if you need to. So like I said, we'll talk about a little bit more in depth about the programs and interest rates and who to contact if you know what you're looking for. So thank you so much for having us tonight.
Thank you. And, I think what's interesting, and I'd be remiss if I didn't welcome Peggy Farrell, my co-chair from Hinckley Allen. And I saw David Hirsch is here as well. So I'd be remiss if I didn't say that Peggy and I have done this for a little while now. And we seem to recall back in 2008, we had a lot of great companies that were startups that were just getting their legs under them, and they got wiped out by the recession. And it's great to see that, you know, this time around, as we face some economic struggles, there are some programs out there to help some of these businesses that are just getting their legs under them. And hopefully we don't have the same issue where we lost some really good companies because of the lack of other types of funding sources. So it'd be great to cover that this evening. So I want to throw the first question out there, and I think we'll start with Ed, because, you know, Ed, you sold your company in the middle of a pandemic. So I think, you know, the thing to address the big gorilla in the room is there's a pandemic going on, and what are you seeing and hearing out there for investment, for funding opportunities, for M&A? And I think, you know, you've got a great view of it because you basically lived it over the last 12 to 18 months.
Yeah, thank you, Anthony. We really were focused after we got our initial traction, initial funding with the Rhode Island Business Plan Competition and SBIR. We then really focused on just growing a good business. You know, we just focused on our customers and trying to solve that, and really kept our heads down and just kept plugging. We were very fortunate that our primary mode of business is with the Department of Defense. So as quote unquote essential workers, we were not negatively affected with COVID. You know, meaning, you know, we kept income coming, we kept being able to grind. And what we actually were approached by Bell Textron. We weren't out there actively shopping, and we did work with KLR and Anthony directly. And what we quickly heard was that a lot of the big companies are needing to grow, and their mode to grow is acquisitions. And that absolutely turned out to be the case. And as we were progressing with Bell Textron, we got approached by two other companies. So depending on the marketplace you're in, M&A is really pretty hot now because interest rates are so low. There's a lot of cash on balance sheets, and companies need to grow to keep their stock prices moving.
Yeah, you know, you raise an interesting point. I mentioned that the last big wipeout of, you know, the economy was over 10 years ago. And there's a lot of companies that are large companies that that are sitting on stockpiles of capital, and they're looking to deploy them. And the thing we've seen over the last 12 months is that even though there's you know, the media and the world would make you think that business isn't happening, it's happening. It's still happening. And to your point, good businesses are what are being targeted. So that's an interesting view of your experience. Ella, you've got a little different view of it because you're actually part of the group that's investing in these companies. And what are you seeing over the last 12 to 18 months? And what do you see over the next 12 to 18 months?
So we actually haven't seen a decline or any reduced percentage of business activity or application. I think companies, especially we're talking about companies that are very, their focus is on innovation. So I think the adaptability by startups was very quick to adapt to Zoom. And we've immediately transferred all of our process to internet-based. And we continue to do all of our meetings, all of our pitches, all of our selection committee, everything continue to happen on Zoom. As a matter of fact, I think this year we've already had the amount of new investments that we typically have in a year within a quarter. So I think, you know, definitely COVID has presented a lot of unique challenges, and it's not easy to get funding. But for the ones that manage to showcase themselves, show adaptability, and show uniqueness, there is still funding available.
That's a really great to hear. And, you know, it is interesting if you've done as many deals in a quarter that you usually do in a year. You know, I think conflict and what we're going through, if you can get through it, you breed, innovation, and it's out there. And that's great to see that investors are still willing to invest in the middle of some unprecedented occurrence.
I didn't answer your second part. I'm sorry. You said, what do you think that, how is it going to go from here onwards? I think we're going to have some sort of a hybrid model. And that's probably true for many businesses, because as much as we're all struggling with Zoom fatigue, we realize that we can take a lot more work. There's no commute in between meetings, and it's easier to hold meetings. Suddenly, the scope of the meeting and the geographical scope isn't limited. We are seeing investors wanting to invest from different regions, where before we were face-to-face meetings, so it was really limited to companies or investors that were from nearby. So I think a lot of things are going to change, and that might be a little bit of a silver lining of this whole situation, where we're going to see some sort of a hybrid model in terms of how we do business in the future.
I was talking today with several companies, and that's definitely part of the conversation that's on the table. We're picking up a couple hours a day in commuting, and then going from meeting to meeting. You can actually book meetings back to back if you're doing them over Zoom, so you can get more, I guess, business done in a day. So it is interesting to see, and a lot of the companies are saying that when we get past this, they'll be going back to the office only a couple of days a week. It's going to be a new normal, and I hate to use that word because we keep hearing new normal, but it will be a different version of business.
Anthony, I wonder if our panelists could talk a little bit about, I think the impact of COVID, the activity, et cetera, is really industry specific in terms of, as Ed said, he was in an essential service. His revenue source was the government, which is a big chunk of everybody's revenue source, or a lot of companies' revenue source these days through programs. Biotech, I think, because of just the focus on healthcare, has probably been, a sort of front and center industry for investment. There are other industries probably not doing so well, and I think that's a factor to be considered. And how, in my experience, and I work in the M&A world, very active M&A market in 2020, much after sort of a pause in the March, April timeframe when everybody's trying to figure out what was going to happen. And then very active, but active with a focus on how does the business fare in a black swan event like a pandemic. I just wonder if people can sort of address that.
Sure. Anybody want to take that question?
I would, since we were not necessarily negatively affected because of our business, what I would say, despite all the Zoom and all that, I would think it'd be a challenge to build great relationships, because especially when you're starting the business and trying to get in front of people, a Zoom call, we're face to face, but it's really hard to get those relationships built. Being able to get that face to face. So anything you could do to keep those relationships going and just keep touching is of tremendous value. We've cultivated relationships over 6 years, and some of them are just starting to pan out. It really is a long game.
Yeah, I think maybe I can say something on what Peggy was addressing. I very much agree. There is some sort of a balance that we're trying to find, and that the market is trying to find, between the fact that there is money circulating around, and the market has certainly been very, very active and profitable over the last couple of years, to the fact that the focus of investing or M&A activity has shifted to certain type of industries. And definitely we see an effect, a negative effect on some others. And the main would be obviously the whole brick and mortar shops, the ones that were completely, all the business models that are based on physical location, that was very much affected by the fact that a lot of places have just been closed. And because they've been closed, it really gave rise to the monopolization, if you can say, by other vendors like Amazon or other centralized operations facilities. And it's a very good question to try to predict what would the future be. I think people got used to buying everything online, and it's not very certain if they're going to go back as they were to the shops. So I think they will. I mean, we're all wanting to have some face-to-face shopping and all that. But while maybe we are doing now 90% online shopping, and before pre-pandemic, we were doing 15%, maybe it's going to shift to 40% and 60%. But it's not probably going to go back to the way it was. And I think also it will take people a long time to feel comfortable with the way things were. So definitely, and as we are also evaluating, and it's been the same with the M&A, the investment has shifted in terms of evaluating the risk in things that are not very technology based and adaptable.
And you even see it in the ads. Because of what happened, for example, to sports centers and athletic centers, the explosion of the technology-based home exercise market.
Peloton and
Peloton, the mirror.
Yeah.
I mean, it's just a barrage because it's the replacement. And the question is, what will happen? Even something as basic as what you wear, right? The brown shoe, what they call the brown shoe, sort of the dress shoe market is devastated. The tennis shoe and athletic shoe and casual shoe market is recovering much faster. Will people, we've all been wearing sweats and stuff for, a year, by and large. We had the casualization of office attire over a decade. And what will anybody go back to a Brooks Brothers look again? I mean, all of those things, I think they affect the availability of capital depending on what your idea is.
Right. Completely agree.
All great points. And Peggy, I'll have you know that I am wearing shorts right now. I don't think I've worn dress slacks in at least a year.
They tell me you're supposed to put on real pants at least once a week, just to make, just as a reality check.
It is interesting because in the accounting firm, we're starting to see the results of operations from 2021 come in. And you're right, there's a segment of the population, a good chunk of the businesses are doing better, or if not the same, and a 10 or 15% reduction is still a win. The segment of the population we see really struggling is travel and tourism, which will come back in time, but that non-essential retail, that brick and mortar retail, is the other component that's struggling, and there's really an unknown there. And I think it's a good segue into speaking to Angela, because I'm sure Seed is seeing some of these type of businesses come in and look for some of this alternative type funding or this SBA type funding to try to weather the storm to get from point A to point B and keep it going. So it's, let's see if Angie can kind of give us some thoughts on what Seed is doing in the middle of the pandemic and what they're seeing.
Thank you. So we've seen a lot of changes, I guess, in the last year. So I would say when everything first shut down last year at this time, we saw a lot of people looking for the PPP and EIDL funding. So we spent a lot of our time servicing our existing clients, trying to help them go on deferments, to maybe do interest only, seeing how we could help and getting all of that into place. So our focus at that time, really, we weren't seeing new inquiries for traditional financing. We were really seeing our existing clients reaching out and asking for some payment relief, anticipating, obviously it wouldn't be a full year of this, but even a few months, and having their businesses shut down and close doors as non-essential businesses. So we went through a few months of the servicing requests, and then SBA rolled out payment relief for our SBA clients, so that changed, and we were spending a lot of our times on the SBA webinars, trying to keep up to speed on the changes to the program, how to be able to provide assistance to the businesses, even though we weren't lending on those programs. The EIDL funding coming directly from SBA and the PPP funding coming from the local banks. We were trying to keep up to speed as best we could to understand how to guide these business owners, who to reach out to, giving them the best support that we could. And if you can remember back to April, when they started rolling out the PPP funding and the EIDL funding, the EIDL sites just kept shutting down. They couldn't handle the volume because they haven't, although SBA, if there's a certain local disaster, it's usually, to a specific area or territory, where this was nationwide. So SBA rolled out their normal disaster relief, but couldn't handle unfortunately, couldn't handle the volume of people applying. So that was a really tough time as a lender, because these people were struggling, everyone was scrambling, and we were trying to provide the best guidance we could. But it was a little bit of a disaster then as a whole, as you can imagine. So that was really the first wave. Then things started to plane out a little bit. The program, the PPP and EIDL, became a little bit of a smoother process for the clients, and we really got back into our normal lending process. So I was out on maternity leave, so I'm not really sure when it flipped the switch, but I came back in August, and we were still not lending. Our lending year has been extremely busy, but I would say that March, April, and May were probably the toughest months, and where things really slowed down for us, and then things started to pick back up. So we had a really busy year with our SBA 504 program for people looking to buy real estate. Maybe at that point, they just wanted to be in a building a lot of times because it's, actually less of a monthly payment for them. They're owning the building. They have a little bit more control over, having to pay the landlord versus paying themselves. So we saw a really, actually very busy year for our 504 program for real estate. And then, although we weren't lending on disaster loans, there were still a lot of people out there that needed the traditional working capital and financing through our small loan program. So I would say that we definitely at Seed did not take a hit in terms of being active. It's just gone in waves, and we were operating a little bit differently than we normally would, because we're trying to adjust and help people. And still to this day, there's webinars constantly on the different programs and the changes and the payment relief from SBA. So our job description has expanded over this pandemic, and what we're responsible for, and trying to be a best resource we can for our client. Just because our primarily our goal and services that we offer is the financing piece of it, a big part of what we do is technical assistance. So we're always trying to, if we can't help, who can, and letting people know of the different resources available to them. So Seed had one of the best years that we've actually had numbers wise in the last few years, which sometimes you kind of figure how does that make sense? But our programs have been a really great fit. I know that it's been tough for these businesses to get financing from their traditional bank or credit union, because the bank is very tied up in lending on PPP. They've really tightened their credit policy, and have really shut down on lending to startups for the most part, or maybe it's a certain industry that they're not comfortable with. So I think that's why Seed's volume has really jumped this year and stayed moving strong, because traditional financings can be hard to come by. For a good reason, because we're not really sure of the economic situation, and so many businesses have been negatively impacted. So I think they've really turned their focus on the disaster lending through PPP, and we're kind of picking up on the traditional side, since we only have one specific program for for people who were negatively affected by COVID.
Very true. And I know I saw Brian McMahon on the call, and I'm sure he would agree that last April and May was organized chaos in the world of trying to get funding out to some of these businesses that were in dire need of cash. So I think, we would all agree with that. And, it is interesting that you bring up some of these alternative funding opportunities, because some of the startups we've worked with, I had one today that actually was applying for PPP2, the second round of the Paycheck Protection Program. And it is interesting because years ago that these funds weren't available, and startup businesses didn't have the opportunity, and entrepreneurs didn't have the opportunity to get this funding. So it is interesting that you can see that in a pandemic, some of these businesses are in fact growing or finding ways to manage the cash flow. Let's start with a different question. Let's talk about how do entrepreneurs decide what type of funding to pursue? And, we've got three different views here. I know we've got Ella representing the angel world, and Angela representing some of the more traditional banking world. And we've got Ed, who I'm sure has dealt with both from the other side of the desk. So let's start with that. I mean, how do you decide what type of funding to pursue? Is crowdsourcing even a thing anymore? Do you self-fund? Do you use credit cards? Do you go knock on doors of family and friends? I mean, what's the best strategy that you could see?
Yeah, certainly not adept enough to know the best strategy by any stretch. I can only tell you what we did wrong and what we did right, and maybe that helps. We spent our early days, before we had any market or technical traction, thinking that we had a big market, two smart founders, and gosh, it'd be easy to raise money. And we went around and tried to get angel funding, and we got all very nicely, but no's across the board because we were too early. It didn't have market traction. We then focused up greatly, had a great learning session at Mass Challenge, and really focus on what is the market telling us. And that's what we then started to focus on. What was the headache that we had the medicine for that people were willing to pay for? And we started working with big companies. A lot of big companies actually have entrepreneur programs now where they will get you seed funding and to get involved. We were in the Sikorsky Entrepreneurial Challenge, which got us a victory there, a little bit of funding, and started us working with them. That helped us win the Rhode Island Business Plan competition, helped us get an SBIR. And we were just very aggressive seeking funding wherever we could early on, really with no ego. Wherever the market would say that we were creating value, we would try to go. And I think one of the big things on the sales front that all ties to this is that if you got the mindset that you've got to swing at 100 pitches to hit 3 on the sales front, a lot of these grant applications have a 10% success rate. So if you don't have a fear of rejection, we saw that as a kind of a, hey, we're tripling our percentage, and that really helped us.
Another thing I think that you and your founder Dave did well is, from a distance I watched, you guys always figured out a way to pivot and do something different. And you always were willing to try something different, and you never took no. It was okay, let's try to do this, let's try to do that. And it was always a complementary. You always had your focus on one business line, but you always tried complementary things to keep things going forward, which allowed you, and we'll talk about this now when we move to maybe some angel funding, but it allowed you guys to really control your business. You didn't bring in any outside investors early on, because when you bring in investors, you give up equity. And, so it's a balance. You take cash in, but you also give up equity. And I think you guys went the road of let's figure it out ourselves, as opposed to bring in investors and give up equity early on, because you kind of knew it was a longer play to get to where you wanted to be.
Anthony, I would also say you give up equity and you give up control. or at least some control.
Right.
So
One of the
which may be even more important.
one of the crazy things that Anthony kind of brought up that David and I did early on was as we were growing and starting to get little traction here, little traction there, $5,000 here, 10 grand there, we needed equipment to build out a lab, and so we would comb auctions and companies that had gone out of business, and we would go and buy the equipment we needed there and buy an extra one and then sell it on eBay. And then take that money, then go buy the next piece of equipment that we needed. And we'd buy 2 of each and then sell one on eBay and put the proceeds, kept it in the business and kept doing that. And it turned into $250,000 in revenue just from that kind of hustle and grind.
Resiliency is what we call it. And, I think, I think Ella can shine light on this is, sometimes one of the biggest components of making a decision to invest in a business is, you're investing in the people and their ability to make this happen. And that's one thing that you and Dave always did was you made it happen. And so, Ella, I don't know if you can share about, the thoughts of having an angel invest in your business early on, the pros and the cons. There are definitely some pros and some cons. And what are angels looking for?
So, good question. First, Ed, kudos to you on finding a way to sponsor and give yourself a runway while you're building your company. You're probably that's a pretty good revenue stream, and I bet there are some days you look on you look at equipment and you're like, maybe I can make a buck on that. It's very creative. It's great. I don't really know. Did you consider angel investing in the beginning and decided against it, or it's also not that easy to get? Sometimes companies end up in this situation where, you can look backwards and say, oh, it's great. I didn't give this, some of the control in the company because I managed to get it otherwise. But, I think some other companies get to that I'll figure it out route because it's actually not that easy to get also angel investing. Did you try to get angel money, or you kind of decided you don't want it?
We actually did. We spent our first several months doing it, and we were just too early. In retrospect, we absolutely were. We absolutely were too early and unsophisticated and not the right fit. And it just worked out because it forced the resiliency to keep grinding. And then by the time we were probably truly ready for it, we didn't need it.
Yeah, well, that's a great story, really. And I'm really happy that the end of the story was a success because that's really hard to achieve. So you combined a good idea with grit and hard work and probably some luck involved in that. But I'm glad the results at the end were awesome, were great. To your question about what we're looking for as an angel investing, angel investors, I think yes, we're definitely investing in people, not just in the technology. As some say, we're betting on the jockey, but I think it's pretty understandable when you think about it. When a company is in early stage and you're taking a big risk because there's so many great ideas out there. It's all about the execution. You're taking a big risk. Who can execute this idea, and who can sustain changes in the environment while they are developing this idea and still manage to come on top. So it's hard. It's really difficult, which is why the returns when it's successful are accordingly. But there's also a fair amount of risk, a big amount of risk that the investor is taking in the beginning. So I think it's extremely important to have a look at the team and have faith that team can overcome challenges and take the idea to a successful execution. We were asking advantages and disadvantages of bringing in angel investors. I think I think Peggy was mentioning the disadvantage that you are relinquishing a certain amount of control, and that a lot of time is how much control you're relinquishing is depending on what type of funding note you negotiated, whether it's a convertible or equity issuance or whatever whether you're giving board seats, whether you're giving a control or no control, but whatever it is, you're certainly relinquishing some measure of control, because the angel investors are usually not completely passive investors. They're investing in companies because not just because they want to get a straightforward return, because when I look at, we have a decent IRR when you look at the last 20 years, but I think probably the investors would have done better if they just put the money 20 years in the stock market. So I think there's an element here of people that most of them had successful careers, and they want to be involved in the entrepreneurial community. They want to help. They want to share the excitement of building something new and contribute also from their experience. So what you get when you bring in a good group of angel investors, or even an individual angel investor, is not just money, but a lot of times you get expert help, expert advice, and you get connections, and the connections are huge. In our case, for example, where there are some deals that are early stage, we're almost like incubating them. We're helping them grow. As a result, we're also getting in a low valuation. But we have people that have been 30, 40 years, very senior in the pharma industry and other industries, and they are going to be on the board, and they're connecting to these large institutions that are very happy to welcome good deals, and they trust the people that they know that are on, in our group or on the boards, to actually evaluate good deals for them. So it's kind of like it helps everyone, and it helps cut down on the number of deals that they have to look and select. The investor gets a better return and connections, and the company gets not just the money, but they get also the connections and the possible very substantial help on their business development.
That's a great summary. I think all too often entrepreneurs focus too much on what they're giving up and not what they're getting. And they're getting credibility. When you bring an angel in that's been there, done that, all too often you see a lot of really good ideas fail because the business didn't have the right people guiding them. It's their first go at it. And I've always said I'd rather own 50% of a $100 million business than 100% of $1 million business. And I think, you get there when you bring in the experts, the right people.
Right. And probably all these ideas of things none of us thought they will succeed. And there's so many people working on the same stuff. Really, if they manage, whoever is the very, how do you say, some of the CEOs are just excellent in the kind of like a rodeo of going between investors to investors and getting the support. But a lot of it, I've seen a lot of companies and investment that I didn't think they were the best, and I didn't think the idea was the best. But once you get everyone behind you and you get the support and the money, that's already there. This is what's going to make it happen. And a lot of time, it's hard to break into the first group of angel investors, but once it goes through one of us, and there's about 3-4 very large group in New England, then we already submit with the due diligence report, the company to the other angel groups, and your chance of getting funding by one of them after you've gone through one group is substantially higher. As a matter of fact, we have companies that were rejected previously by the other groups, but once they hear that we invested in them, they'll take another look, and vice versa. We get other companies that we rejected before, but we'll look at them again for two reasons. First of all, we assume that they made some head, traction, but we also know that now they have They have great backers. They have all these connections and they have funding. So it's definitely a good reason to look at them again.
Yeah, we hear about the syndication of those deals, and I think it is important. Sometimes you might go to an angel group and your business may not lend itself to what that angel group has knowledge in. But when you go to a different one, let's say that in your medical tech business and you end up at an angel group that has a champion in that field that sees something in it and gets behind it, once you've got that credibility because one's funded you and they've got a champion in that industry, the others will syndicate on, and that's a great story for a business when that happens.
Absolutely.
Angie, when's a good time for a business to contact seed? What are you looking for? Is there ever too early or too late?
I would say it's never too early to reach out, have the conversation with your lender, and find out, what are they going to be looking for? What type of businesses can they lend to? What's their basic lending criteria? So you can prepare yourself. I think a lot of people apply for financing when it's far too late and they're in a rush and things need to move quickly, almost overnight. And that's just, unfortunately, it's pretty impossible for it to move that quickly. So I think being prepared is really the best bet. So even if you're not ready to apply for financing for another 6 months, do the research. And we always say, start with your local bank, who you have a banking relationship with personally or for your business. Talk to them about your financing need and get a feel for whether or not you think that they can move forward. And a lot of the lending partners we work with, they do a great job in being able to just have those conversations with you. Every situation is unique, right? So we all have our own lending guidelines and criteria, but every situation is very different, right? So we always suggest reach out, have a conversation with the lender, find out, they're going to ask you questions about your project, what you're looking to do, and they'll be able to share their requirements so you can prepare yourself. Maybe your credit's not high enough yet, but you can get to that point. Maybe the amount that you can qualify for potentially is limited because you don't have any collateral, or maybe it's a startup business, so there's a restriction, or maybe there's a restriction because of your industry. So it's not common knowledge to understand what's going to be expected of you. So I always suggest, even after meetings like this today, even though if we were to talk through, what seed looks for, there's a lot of gray area. So if you think you're going to need financing, reach out sooner than later, get the information, get the facts, educate yourself on the programs available. And then, we can give you some guidance. If we don't think we can move forward, we're going to be honest with you and we're going to try to help find an alternative source. If it's something it sounds like we can look at, we'll go through a little more details, send you a list of documents and help you to work through the process. So finding a lender that you're comfortable with, I think, is key as well. Somebody that you can work with, and because ultimately it's going to be a partnership as you work through your loan process. So I don't think it can ever be too early to reach out to find the programs, and keeping in mind that every lending institution, every bank and credit union, every non-traditional lender, we're always going to look at things differently than each other. So it's not one qualification across the board. So if you don't qualify at one place, it's possible you can get financing somewhere else. So I just say reach out as soon as possible, have that conversation, and allow your lender to give you some feedback. And the biggest thing I think is don't be discouraged if you are declined by a bank or credit union, or seed. Just take that as a learning opportunity, ask what you can work on or change, and try to get yourself ready for financing. So just because one person says no doesn't mean that it's forever, and it doesn't mean that another lender isn't willing to look at it now.
I think it's very interesting when you call a lender a partner, because a lot of business owners and entrepreneurs don't necessarily think of it that way. But I think it's important what you're saying is that, the lending institution will work with you, and you may not be ideally a candidate today for lending, but that doesn't mean you can't work together to get you to be able to be a candidate for them.
Right. Exactly. And a big part when we are moving forward is, knowing that your lender is a partner with you. we're the ones trying to learn about your business and trying to advocate for you as we move forward through the process, and, you know, working with us and answering the questions and getting the documents that we need. It's all for, you know, it's all for your benefit. So we're really here to be your advocate internally. And then, like I said, you know, if you can find a lender that if they can't help you, ask for guidance. Don't be afraid to ask questions and find out why you weren't approved by the loan, or if there's alternative sources, because a lot of times there are other options out there for you. And like I said, if it's not now, then learning what you need to work on to be ready for financing in the future.
Great. Let's talk about, so we've talked about angel investing, and of course there's a dilution there because you're giving up equity. But there is an alternative type of funding out there, government grants. And, you know, I know, Ed, you mentioned earlier SBIR. There's a whole world of government grants or private foundations, other funding sources out there whereby you can get cash and you don't have to give up equity. There may be some reporting requirements. So Ed, can you talk about the importance of government grants or other type of grant structures, and how they potentially work and how a business could really benefit from them?
Yeah, I mean, our seed funding was effectively the SBIR program. And I saw a note in the chat. I don't know what the SBIR program was back in the 90s, but they've really, the IP rules now are great. They're actually very in favor of the entrepreneur, because they want to encourage that seed funding. Our first SBIR we got was $100,000, which is really all the money in the world when you're first starting out. We then leveraged that, won the Rhode Island business plan competition. That money went back into the pot, and we just were able to grow it, succeed. And after that first $100,000 is really meant to kind of get you through proof of concept when you're in that valley of death. And you can't get sales traction, because if you're doing something novel and you know, nobody wants to buy it yet, getting to a proof of concept so you can show something to your customers is so key. And that we would not be here today without that SBIR program. We got that first $100,000, and then we're successful, highly responsive to our contracting group, and then turn that into the first $1 million order from them, and then grew from there. So there's a bunch of opportunities out there. And the other place that we got a lot of help with two-part was Commerce RI does have the Rhode Island Stack Fund, which matches SBIR grants or contracts. That was extremely helpful. And we also worked with PTAC at Commerce RI to really help us understand what we were getting into, understand the contract language. We went in and just asked a whole bunch of questions. What is this? What is that? And they've got folks that just know contracting inside and out. And we just had some great luck and great folks there to really help guide us through there, and to help us show where there were other opportunities for us to go after.
And remind everybody, it's non-dilutive. So this is cash coming in to help you grow your business, and you get to retain your ownership in the business.
That is absolutely correct. And so certainly you get with an angel investor group or VC funding, you certainly get a stamp of approval, and you also get all those contacts. You can get a similar thing, maybe not, you don't get the commercial push that you do with investors, because they've got skin in the game to help you, because they want a return on their investment, obviously, and that's logical and makes sense. The government wants a return on their investment as well. So if you get past that first phase one, they want a win column, because they want those successful as well. So they've been extremely helpful.
Can I actually ask you if you said you had a small business loan in the beginning? You managed to get that without any collateral?
Oh, we had personal guarantees for sure. So
yeah, that's the issue with a lot of startups, right? That it's tough to actually sign up your house for. It's really stressful.
It was extremely stressful, and having those conversations with our wives, and they were great because that was absolutely a big risk. But one of the things that we found, and to echo the comments, was the banks really were our partners, and it may sound crazy, but they really were, because the bank doesn't want to foreclose on your house.
Yeah, the bank wants to stay interest and the loan back.
Right. So they were great to say, whoa, slow down. You're not ready to take $150,000 loan here. Let's start you with 25 grand. And then we grew and they grew with us, and we just had a great relationship over time. They reined us in from our crazy entrepreneur, let's grow, and said, hey, take it easy. And they nothing but respect for the banks that we worked with along the way.
And I would stress, Ed, that the only reason you're in a Holiday Inn is because you didn't lose your house. This is for work. No, just want to make sure we caveat that so everybody knows.
Right.
Ellie, you see a lot of businesses, and you bring up a good point, is it's very tough to get that initial funding. And so that's why angels are the first go-to for a lot of startup entrepreneurs. Does it bring more credibility to the table when you've seen a business obtain some government funding? Because there is some liquidity there, and Ed mentioned skin in the game. A business comes to present to investors and they've already got some cash and some proof of credibility. Does that help?
So we don't see a lot of businesses that had small business loan, because a lot of the businesses are just not willing to put a personal guarantee. That is extremely stressful. You're thinking about it. You have the founders that couple of years aren't really taking salary. That's already a lot of stress on their household. And then on top of it, they're asking their family to put their house on the line. So kudos to you. And it shows the grit and the execution, and you deserve the success that you've received. But it's extremely stressful. Not a lot of founders are willing to take that route. We do see sometimes founders that are willing to put their own money in. It's always a good sign because it means they believe in the company. I would say the same way if I'd see someone who actually was willing to put, their livelihood beside their income, but also their house on the line. I wouldn't want to see it because I'd be worried that they'll lose their house. But it certainly is attesting to the fact that they really believe in it. We do get companies that, and especially because we invest in a lot of science, that have a lot of grant money. And as Ed was mentioning, it's a good place to go to, and it's extremely difficult to get. But if you're not afraid of rejections, and also you got to learn how to submit grant applications, it's pretty complicated, and you want to make sure that you put in a high quality application. Otherwise, it's really the chance of it is very small. Also, out of respect for the people that actually review it, you want to make sure that you give all the data. But we do see companies that develop their prototype or their initial product with grant money, and that's great. Yeah, when we see that, you basically getting because a lot of these companies are actually saying, our valuation, they don't take the whole grant money into account, which is great. They're saying, we've developed a product. This is, this was on grant money, and the valuation is typically not including all the grant money. Now we're going to commercialize it, and we need the money to commercialize it. So typically we see it as also as some sort of, in a way, a proof that there's a need for that. A lot of times grant money, it's not a one-on-one, because the grant money isn't always, it will support research. So you don't have to actually show commercialization for a lot of the grants. So it's not one-on-one kind of like signal of confidence. But we do definitely, at least, you know, when you see it, so you know a couple of things, that the founder has done an excellent job in applying and establishing the case, and he's got the support of a lot of people, and they got runway. So it's definitely a great source of revenue, and definitely makes the application have better chances, if this is kind of like the answer that you're looking for. Yes.
Great. And, you know, let's jump to Angie. I know not everybody has a spouse as amazing as Ed's that's willing to put the house up. So what are some of the funding opportunities that, you know, the SBA or SEED has, whereby, you know, maybe the collateral might be a little different, or the guarantees might be a little different, or maybe there are personal guarantees and they have to be fully collateralized?
Yeah, that's a great question. So, and this is why we find it so important to have the conversations up front so that we can be, you know, fully disclose what SEED's requirements are going to be to make sure, you know, they have to fit our model and what we're comfortable with, but you as the borrower, you need to feel comfortable with the guidelines as well. So in our, you know, for our loan programs, our small loan programs that don't have commercial real estate involved, we are looking to take a lien on a personal residence for collateral. So if there is a home available, you know, personal residence is number one, really what we're looking for. If you do own a commercial real estate that's outside of this transaction, that may be an option. Or if there's a rental property within our lending territory, that can also be an option. So, you know, we are looking to take a lien on the home for collateral, and some people aren't comfortable with that, but we always let everybody know in our initial conversation that that's really what we're looking for. You know, the type of lending that we're doing is a little bit riskier than the banks, whether it's a startup or existing. So, you know, for our comfort level and our guidelines, if there's a home, we will take a position. It can be a second or a third position, but a lot of times what allows us to look at the loan when traditional financing cannot be obtained is that we look at what's called a global repayment or cash flow. So we're able to consider all personal income and expenses and all business income and expenses as part of our repayment. So a lot of times that does rope in having a spouse guarantee. You know, there are, like I said, every situation's different. There are some instances where maybe a spouse doesn't need to guarantee. But for our process, you know, we're always running credit for anyone who has 20% or more ownership in the business and their spouse. And we have a joint personal financial statement so we can really have a good picture of the entire household. So a lot of times in our small loan programs, the spouses are included. And, you know, even if they don't have any ownership in the business, when you are a small startup business or even an existing business, you know, you are your business. A lot of times your personal and business debts and expenses and income is all really one and the same. So having that secondary source of income, either for yourself or for a spouse that's working, that actually can make it a little bit of a stronger situation and allow us to take on more risk and look at a loan that typically you can't get traditional financing for. So although some people may not be comfortable, we have a lot of people that have the spousal support, which is great, and understand and allow us to move forward in that manner. So, you know, in situations where somebody does not own a home, we do have the option to get a guarantee from SBA because we are community advantage lender, which is similar to the bank's 7A loan program.
That would be limited for a small amount, right? Do you have, is that the micro loans?
So the SBA microloan goes up to $50,000. The guarantee from SBA is typically for a little bit of a larger loan.
I think it's interesting that, as you said, you know, if the bank's looking at a loan, it's not just that you have the collateral, you have to have the future cash flow to pay the loan. They're looking at that as well. I think all too often people say, well, I've got the collateral.
Right, which is a great point. So for, you know, for us at Seed, we're a cash flow lender. So we want to see that there's active income coming into the household, again, either for the borrower or their spouse, that there's that secondary source of income is so important, especially for a startup business. For us, we actually really require a secondary source of income. So it can be income from a spouse who's working that can help to support the household while the business gets up and running, or for yourself if you're working full-time or part-time while the business gets started. Because having that active cash flow, you know, we really don't want to put you in a position where you have to pick and choose whether to pay your household bills or the Seed loan. So that really mitigates the risk, having that secondary source of income, because we don't have a financial history for the business at that point. And sometimes it takes businesses, 6 months to a year, sometimes even 2 years to really start making a profit and to break even. So having that cushion takes a little bit of the risk off and allows us to move forward.
Great. We've got a few minutes left, and I've got other questions, but I do want to open the floor up to those attending if they have any questions to ask our panelists. I think it would be important to get what's on their mind if there's any questions out there that maybe I don't have or haven't asked yet. So I don't know if anybody has any questions, if they could jump in if they wanted to. I see John's raising his hand. John, did you want to jump in?
Yes, I wasn't sure how I could actually ask the question in the chat, but in regards to filling out the application for the Rhode Island Business Plan, this is something new. I only applied 5 years ago, and I guess I failed to look at the entire package as the one application that's in the website is only a brief synopsis of what is the plan you have to send as a hard copy. Is that what I understand? That is that you judge? Okay, I see a nodding head of Ms. Farrell there.
John.
Okay,
Yeah,
and then
that's if you, we said, this is the way it works. There's the short application form,
in the
relatively
website,
short, which is a pre-screening device.
right?
And from that, the judges pick semifinalists who have to submit a complete business plan.
Oh, I thought the complete business plan was also due on the 29th.
No.
Oh,
But it is due, within 2 weeks of the being told. So as we say, don't wait until you find out that you're a semifinalist. You will not have time to put together a credible business plan.
okay.
So-
On top of the fact that the site only has the revenue that you're asking for revenue for a product line and the overall income that you will generate over 5 years projected. And my product basically is an all-out service facility. And I'm not sure if that's going to count because I'm collecting on rents and I'm implementing my innovations in it to be able to generate the monies I need to let it run itself.
Yeah, I mean, and we'll go look at the form, but it is intended to be revenue sources. And it isn't necessarily, I mean, the product is sometimes a service. So it's revenue sources. So, I mean, I haven't looked at the specifics. The financials, quite honestly, are there because back in the beginning, we found that people had given no thought to the financial model of how they were going to develop a business, a product, a service, what it was going to take. They literally, had no sense.
Right.
It became clear, and we get business plans that were like, it may be a great
Pie in
idea,
the sky,
but
blue
there's
sky.
nothing behind it. So
Mhm.
this is an effort to see that people have thought through
Right.
the requirements, et cetera.
Okay, one last question, then I'll get off. The thing that I saw in this application that I haven't seen in any of the previous, well, maybe in the last two, is a local address. Now, I can't put an address for my office there until I get there. So could I use the what you call the venue or the offices offered, like Shartner and Erickson, as far as that be my office there as that facility?
Yeah, I mean, quite honestly, I don't know that there's anything new in the application. If that's new, I'm not aware of it. As you are aware, the applicant, the awards requirements are that people either expand or
It's like I
establish.
said,
Rhode
it's
Island.
been a
But
while.
I hear you. I think that's the kind of thing. I'm not sure the right answer. I'd probably have to talk to Beth and
Okay.
Anthony about the answer to that.
Okay.
I wasn't aware that that was a specific, I think most people have a local address because, but we have gotten applications from China and from India. So I don't know if that's new or not.
Well, yeah, it asked for my, address, my address, but then it kind of blew me when it says, what's your local address?
Oh.
Mr. Mangiarelli, how do you say that? I'm sorry. Is
talking to you,
that
Angie.
warranted?
Yeah.
Yeah.
Well, I would say, John, let's follow up after with Beth and Peggy, and we can get some resolution on that. But you do bring up a good question in financial information, and we've got a great panel here tonight, and I think one of the things that we can spin to the panel is how important is financial information when going to get funding, or when you're going to approach an angel group. So, I know, Ed, you've been through the process, 5-year projections, and you're basically going like this. How important was it, and how important is it to keep updating those projections?
Yeah, I thought it was primal.
Yeah, we were fortunate, and I would, we did go the SBIR front. We went different things, and we did not end up with outside investors. We were very fortunate that both David and I were it's called veteran war horses of business. So I had 20-year career before that, David 30 years. So we had been in operations, different P&L responsibilities, all of that type of stuff. So we were updating our business plan all the time. We actually were cash flow positive year one, and have been cash flow positive every single year, because we didn't just at the end of the day, we needed at least $3 in the account to make sure that we were breaking even or positive every year. But we had probably meetings every 6 months on here's where we're going, here's our business plan, and we'd get support. We'd vetted it. We had a bunch of mentors that we'd have look at it. That was one of the great things with Mass Challenge, the Rhode Island business plan. They came in and took a look at our business plan and gave us great feedback, and we took it and implemented it. It was truly, I would say, we tried to operate the business the best we could with minimal ego. Let the market tell us where to go. Let the market tell us what they liked and didn't like, not put us on the market. And then smarter people than us on the legal side and the financial side giving us input and listening to it. And we were sponges. We're absolutely sponges.
I'll kick that over to Ella. Is how important is it, the financial projections, when you're looking at an opportunity to invest as an angel? How important are those financials, those projections?
Extremely important. Extremely important. It tells you a couple of things. First of all, you want to know, because typically the company isn't going to ask the whole amount they need for a fully executable idea that is a cash flow positive. So they'll do, let's say, a note for $1 million. Let's say our group will fill half of it, $500,000, then we'll syndicate it to the other groups. But that money typically isn't enough for cash flow positive. So they'll need to display some sort of like a timeline, a roadmap of what exactly are they going to use this money for, how far it's going to get them, and how much money they're going to need at what stage. So we can look up, we learn from them, from that couple of things. First of all, that the founders understand money, because if they don't understand money and how to handle their financials and their financial projection, there's no point putting money in the company. And the second thing is also to evaluate if we think they're going to have enough money to reach the milestone that will allow them to raise more money, and whether we think it's feasible. And also, and lastly, the financial projections help us evaluate and put some sort of evaluation or perhaps, we decide not, to do a more of a discounted convertible note instead of putting a number. But there's still, the whole picture help us understand what this company is worth and where it's going.
I hear all the time from angels, they say, the biggest thing with the financial projection is when we're investing in a business, don't, your definition of conservative is different than this. Tell us how much money you need in total to get this to where it needs to be. Don't, we're not going to be happy if you say you only need 500,000 and you really need $1 million. You're not doing us favors if you come in lower. We want to know the total amount so that, we can invest appropriately. We don't want you to come back in 6 months and say, I'm out of money because I underguessed how much money I needed.
This is where the roadmap is important, because what we want to see is that they have enough money to reach the next point where in their development to ask for money again. And we also, it helps us, we don't tend to get, if we don't think, if they're asking $500,000, but we see that $500,000 isn't going to get them the year they need to come out with a prototype so they can come and raise another round or go to VC, then it's just not workable. It's not, we don't get a lot of companies that actually don't need the money. It's not what we mean also, you don't need the money, but ask for more, because companies don't want to give more equity. So typically they'll ask for what they need, but we want to see that their projections are reasonable, that it's reasonable to believe that the money will be enough. And of course, there's a certain percentage over what they project that should be added, because a lot of these projections, of course, are guesstimates, and they're a lot of times been presented in a little bit of a favorable light.
Well, that's why I'm approaching it this way, because I've been rejected for so many times on trying to develop a prototype for all the different SBIRs, STTRs, EPA, NASA, DARPA, everybody, that it's no longer a thing about getting a prototype of a single item. Now I'm looking at to pave my road, to basically establish this facility that's going to be powered by a number of my different innovations, and start the funding from getting things running to have a space to be able to be rented in this future complex. And the idea behind it is, for me, because I'm not I am financial, but I don't have the professionalism in finances, is to use Merrill Lynch as my leverage and or placement account to be able to help those investors or vendors interested in renting a space or investing in my project to go straight over to Merrill Lynch, and they have securities and guarantees for their money invested. And then that way they don't have any worries financially. And then I use that as my fulcrum for getting more money if I need it. Because, well, to me, for me, it's been an issue when I first started that it was only $100,000 to get a WCMA Merrill Lynch account. Now it's 250 grand. And basically, with as long as I've been doing this, I've had to support it on my own, because I haven't been able to get substantial funds to get into a facility. I've been basically a backyard inventor, literally, but that was only seasonal because it was in Anchorage. Now that I'm home in Hawaii, I just don't have the money, and it's too freaking hot to work outside and at the storage yard where I got all my stuffs. I mean, pardon my language, but it's frustrating because government, the way it's been for before, as an oil-based oil politics and recurring recessions and everything like that, they look at the finances as it's grown since forever. I mean, everybody's based on a certain way of how finances are developed and how they are accrued and or earned, where my creative means of getting the finances together isn't something that they've ever heard of, or they think, oh man, this is a pie in the sky or blue sky loan or project. And yeah, it's blue sky, it's environmental. I mean, that's what we're trying to do, is clear up the sky, clean up the oceans and all kinds of stuff, you know. And it's just that it seems, when I started, I've been in business since 1985 or 84, and it was for my wife. And I'm opening up a Hawaiian flower shop in Anchorage. Now, of course, Hawaii is marketable. I mean, it's just anybody and everybody likes Hawaii. We got so popular, I had to design a luau garden, and that's where this project is based on. And if you ever, you know what a luau is, right? A luau is, you know, the Hawaiian thing, party thing. And so it was her, you know, we knew how to cater a luau. She was a hula kumu, or a teacher. And of course, yeah, I learned how to do the hula. And basically we did all these shows, but there wasn't a place to do it. And then when I came up with this idea and it needed a power system, and I found out a green way to do it, the idea of a green machine or green power generator in Alaska, where the oil production is like, you know, God, I was pretty well laughed out of the bank. There was a couple guys, couple loan officers that just was laughing at me as I walked out they enjoyed the idea, the concept of having a Hawaiian park in Alaska. But as soon as I mentioned it's going to have an emergency, you know, green power system, they go, I'm sorry, you know. But anyway, I'm gonna get carried away. I let somebody else talk. I'm sorry.
All right. Hey, John, thanks. You know, you bring up a good point, and I'll just reiterate something Ed said earlier. You just got to keep knocking on doors and not getting frustrated, and you got to keep trying, keep trying. I mean, you know, there's 99 people that say no, but there's one person that says yes, and you got to find the right person. And, you know, and I want to jump to Angie here, just, you know, for her thoughts on, you know, you see a lot. You probably say no more than you say yes. And, you know, what's the rate of no's versus yeses?
My knuckles are raw, man.
Yeah, that's a great question. So for the small loan program, you know, I would say that we probably approve 1 in every 4 loans that we look at. It's tough. It's really tough. And, you know, like I said, usually our guidance is, you know, we'll try to give people some guidance as to why we couldn't help them and to educate them on what we're looking for, and so that they can work on those items or try to find alternative sources for financing. So, you know, it is really tough. And you talked about, you know, why financing portion of it is important. And, you know, for those startups, putting together the business plan and financial projections is key, because it really allows you, you know, going back to talking about the roadmap, is how are you going to operate? How are you going to get there? What your plan is? And it allows you to follow that path. And understanding the finances from your business is so important for you. And there's a lot of help out there that's free of charge that can help you to understand that and work through the business plan and financial projections. And then understanding the finances, if you're an existing business, is also very important. And, you know, like I said, we come across a lot of times where there's an existing business that we may not be able to move forward with because we can't show that the loan can be repaid based on what's being reflected on the tax return. And sometimes what's on the tax return is not really an accurate depiction of how the business is operating. So it's always so important to really show how your business is doing, reflect a true picture on your tax return, especially if you're going for financing, so that you can give yourself credit and be able to qualify for that loan. Because the lenders are, you know, for us in the traditional financing world, we're always going to be looking at what's on paper, what's on the tax return. So sometimes there's a big disconnect there where, you know, the borrower may have a hard time understanding because, you know, they have good credit, they're paying their bills, but maybe the tax returns aren't reflecting a true picture of how the business is operating. So it makes it hard for us because that's what really we have to rely on.
Great. So I want to be considerate of everybody's time because I know Beth has a few housekeeping comments to make as well. But at this point, you know, we've had a great panel this evening. We've got 3 really different, interesting views of finding funds and the process that you go through. And I guess what I would say now is let's throw out some last thoughts. I mean, Ed, Angie, Elle, what are your last thoughts? Anything you want people to just walk away with this evening? Start with you, Ed.
Yeah, the biggest thing I would say, whether you go banks, VC, angel, funded by a corporation or whatever, is create value and value in relationships. Truly, truly, truly. I just posted a quick thing in the chat. I looked up, I kept a log of every single touch throughout the whole time with Response Technologies. We had 63 no's before we got our first yes. So it wasn't, we're here 2021, had an exit. It was not rainbows and unicorns by any stretch. But we built relationships with banking, relationships with Commerce RI, relationships with KLR, the business plan competition. We just built relationships and listened to create value. When we got 63 no's, I never thought of those as a no. I thought not today. And I failed to create enough value to get them to respond positively. So how do we change and adapt?
And I'd like to say that we were the first to say yes at the Rhode Island Business Competition. I'd like to say that. So
number 2. So
You said you won something at Mass Challenge, right?
we were not money, but we down selected to get in the 128. And so we got to go through that accelerator, which the early stages of that was 2015. That was some great mentors that we got out of that as well.
That's fantastic.
how about you, Ella? Any final thoughts that you'd like to share?
So I think I don't know how many on the call today are entrepreneurs, but I think, this was great. I think it was a great idea and a great resource to get kind of like a feedback from 3 different angles, from the entrepreneur, from the angel investor, and from the banking side, or the small traditional and non-traditional loans. I think it's there were a lot of great points. The most important is get your game straight, get your plan squared, your financials right, but have grit. Do not don't constrain yourself into one avenue, but go in different directions in terms of how you want to achieve the goal and how you look for the funding, and have a lot of grit. And I think a very important point that Ed added at the end is build relationships. I think at the end of the day, if you show, we have a fantastic a company that we're investing in now. And one of the things that we highlighted, of course, she's brilliant. She's a brilliant scientist from MIT, but one of the things that I don't mean to, of course, we have different entrepreneurs that come from all area of different educational and different experience. But what I wanted to highlight, that in spite of being an absolute brilliant PhD from MIT with tremendous experience, one of the things that we love the most about her, that she's so coachable, that she takes the feedback, she's fine with that, and she implements it right into an action plan. So for us to see that someone doesn't, this is not about your ego, it's about, you have a plan, you want to execute it. It's a team's game. You want to be at the helm, and you want to drive that boat and be the leader. But this is not a one person's game. You got to know how to work in a team, and you got to know how to take feedback and want to make people want to help you. So that, I think, is a really good advice that Ed here mentioned, and I'd concur.
Thank you. Angie, how about yourself? Any last thoughts?
I would just say that to take advantage of all the resources available out there, underneath SBA, there's resources, either group workshop sessions. A lot of them are free of charge, or one-on-one individual sessions that can help you and to guide you. There's so many resources, and sometimes it can be overwhelming to know what direction to work in. And back, to some of the original question is, how do you know who to turn to for financing? What's the right option for you? So, there's this Small Business Development Center under SBA and SCORE, and the Center for Women in Enterprise, and the Veteran Business Outreach Center. They have a bunch of great resources, and I put my contact information in the chat. So if you have, if you're looking for that one-on-one assistance just to help you maybe review your business plan and put together projections, or to grow your business. I mean, it's such an array of services available. I can certainly connect you with those resources. If you are looking for financing, I would say reach out to the lenders, get some guidance, and just see if it would be a good fit. All the panelists here can answer your questions. And like I said, if we're not a good fit for you, we're always trying to look for an alternative source for you. But, not being discouraged, doing your homework, and understanding that, the lender you're working with, they're on your team and they want you to succeed. And, their job is to make loans and help businesses start up and grow. So, sometimes if we provide feedback to you that's not, ideal for you, we at least are, going to help guide you in the right direction. So know that we're here to help. And, sometimes you don't know what you don't know. So asking those questions and not being afraid to ask questions and advocate for yourself, and just to, be receptive to the feedback, one way or the other from the lender.
Great, thank you. So if I could summarize a couple key points from tonight, have grit, build relationships, be coachable, utilize your resources, don't get discouraged, but most importantly, find a way to create value. That's kind of what I'm taking away from this evening. And I'd just like to thank the panel at this time. Amazing panel tonight, 3 different views of the world. Ed Bard, co-founder of Response Technologies. Ella Hood, welcome, the new executive director of Cherrystone Angel Group. And Angela Laperriere, Assistant Vice President, Business Assistance Manager and Lending Officer for Seed Corporation. Thank you for your time this evening and sharing your insights with our audience. To our audience, I'd like to thank you for your time and attention. And once again, I'd like to thank our sponsors, and also Bryant for being our social media team, as well as Venture Cafe for being here this evening and allowing us to have this amazing session. So I'd like to turn it over this time to Beth Cotter, our very amazing executive director, who I'm sure has some thoughts. So thank you all.
Well, again, thank you all. We've had this event every year. I have to say this was absolutely outstanding this year. So I really appreciate all 3 of you being on tonight. I know everyone really got a lot of great insights, as Anthony pointed out. There's just a few other things I want to mention. We tried something new at our last event. We're going to do it again this time. We are going to send you out a survey. This is, not only to talk about this event and how you liked it, but also to find out what other kind of programming that you want, because, any way that we can help entrepreneurs, we definitely want to do that. As I mentioned, the deadline for the Rhode Island Business Competition is less than 25 days away. We are only having 1 track this year. We had 2 last year. We only have 1 this year. Last year, we awarded over $180,000 in cash and prizes. So please, look at the application, work through it. If you have any questions, you certainly can reach out to us. Lastly, I want to mention our growth partner, Mass Challenge. Their Mass Challenge 2021 early stage accelerators are also due they're due actually at the end of March. I'm going to put in the chat in a second. You can get a free application fee if you use the code that I'm going to put there. They also are going to have an event called How to Create an Awesome Application. And this will have Mass Challenge experts and judges. That is Thursday, March 11th at 12 o'clock Eastern Standard Time. So I just always like to promote, our partners events as well. So I'll put that in the chat. And it was great seeing everyone. And the next time we'll all be together will be on May 6th for our award ceremony. We hope to all see you then. So be safe until then. And thank you.
Beth, can I just add, we're going to be activating we're already in our space, but we're going to have Venture Cafe Thursday gathering network. People are comfortable. Our building has great protocols. So if any of you need to work on your business plans, you're welcome to use our public lounge and, reach out to Amy, myself, Beth, obviously anyone here for support. But I just wanted everyone to know, Beth, maybe we could host it, at least some of us from our space.
Okay, we'll talk, Toonie.
Okay.
All right, great. Well, thank you everyone again. I hope you all have a wonderful night and a great weekend. And follow us on all of our social media, LinkedIn, Facebook, Twitter, Instagram. We'd love to see you on it. So thanks again.
Thank you.
Thank you.
Good
Thank
night.
you.